Okay, I just got filled and I'm going short Tesla. This is an expensive option for a new trader. I buy the option strike price based on delta. I don't care what the price is. Now, if you remember yesterday, I drew that rectangle and I said, this is where the price is going. Well, this is how I came up with it. I'm showing you what I did. And here is another little rectangle, except the difference here is this is where I'm entering the trade. It's a Fibonacci retracement. It's my favorite area. I'll teach you this later. But if you look at the TSL1 right here, I'm going to draw an arrow because I fully expect the indicator to turn back down. You can see we have the TSL2, the dotted gold line, flat on the ceiling, just a couple bars ago, made this little dip, and I think it's going to continue back down. Now the dotted gold might go back and touch the ceiling again, and that's okay. I don't really care about that. The point I'm making is we're going down. Remember, I keep saying, ask yourself the question, what's on the horizon? Anticipate what is on the horizon. Prepare for what is on the horizon. I heard someone say today, there's a significant amount of time in between deciding the trade, in other words, spotting and qualifying the trade, and then going and choosing the option to put in my matrix to be prepared. And I said, what are you talking about? Keep your Option Station Pro open all the time. You've got your calls on the left side, your puts on the right. You know what your bankroll is. You know what your account balance is. And if you're a new trader, trade a lower delta. First of all, don't trade Tesla out of the gate. Trade the Qs. I love the Qs. The Qs are actually my favorite market because of the leverage. So you should have an idea. You should know exactly which option to purchase, which premium to purchase, which strike price to purchase. I'm saying, all the same thing here. And just go click it and have it load into your matrix like mine does. Okay, now, couple things I want to point out, because this is a classic case of the teacher, saying, do as I say, not as I do. And I understand that, and I want to point that out. First of all, I'm trading a $4 option. All right? That's number one. I don't want any new student trading a $4 option, and there's no reason for that. I don't want any new student trading Tesla. It's too expensive. You could have traded Tesla a year ago, and I loved trading Tesla a year ago. I still love it today. It just requires more money. Okay, so number one is don't trade Tesla. I'm showing you this because if I'm gonna sit here and take a trade, I'm gonna take a trade the way I trade, and I'll stick to 10 contracts for the most part, because even though I can talk through these trades no problem, if I've got 500 contracts on, I really don't want to be talking to anybody. I want to keep my focus on my trade. 10 contracts, I don't give a shit about. 50 contracts, I don't give a shit about. So, we'll use those as examples. Hold on one second. So I fully expect the price to drop. Oh, the other thing that I wanted to point out, the clear, obvious thing is that you don't see a hard stop on this trade. Now, I have a much, much higher risk tolerance than the average bear. Does that mean I'm going to let this go against me thousands of dollars? Hell no. But when you're trading a $4 option, even just 10 contracts, one move, these are in nickel moves, one move is $50. I can't put in $150 stop on a 10 contract trade. That's why you start off with the Qs. Okay? So we're getting to the top of that range. Obviously, it's the direction that I don't want it to go, but I still view that range as an area that the price will fluctuate back and forth before it picks up the momentum, the steam, whatever you want to call it, to start dropping. Now, if you look at my okay, we just updated, and the white TSL updated again. I'm just going to move this over because I still have all the faith in the world in my trade. That's another thing. It is very strange to me that people go through this uncomfortable way of trading. You know, I used to call it white knuckle trading. If you are really nervous about every trade that you put on, you are not confident in your ability, your understanding, the method, the approach, your rules. You're not confident in anything. That's why you get nervous. That's why new traders get nervous when they trade, because they're uneducated. They don't have enough experience. That's why I tell, and I said the same thing to you. Every single person that walks through the door here to learn how to do this, from me, from us, price is starting to fall a little bit here, is told the same thing. There's no reason in the world why you should risk a penny when you're learning how to trade. Once you learn how to do this, you have it down, then you segue to trading one contract. You know, I break it down into 3 phases. The learning phase, which is paper trading. The startup phase, which is where you have a little skin in the game. You're trading one contract. This is where your vision, your focus gets very sharp because you have that little bit of money in the trade. And it doesn't matter that it's only one contract. It will absolutely cause everyone to focus more. And then you move into the third and final phase before you really take off as a trader. And that third phase I call the growth phase. That's where you go from trading one contract to 10 to start making money and building up your confidence. Building up it's like a pilot with hours. You know, you can't go get a job as a commercial pilot if you don't have enough hours in the airplane. They don't just take you right out of school and say, hop in there and be responsible for 300 lives. It doesn't work that way. You know, when people realize what they're doing and the rewards of trading, and more importantly, actually, the risks, they wouldn't be so careless about how they start trading. And I really try and drill that home, because this is the best business in the world. You know, that I've said 10,000 times. It is. I believe it 100%. Where can you sit at home and make $10,000 a day, $5,000 a day? Or shit, as a new trader, where can you sit at home and make $450 a day trading 10 contracts in the queues? Give me a break. All right, we're starting to drop. Normally what I do is, in these situations, as you know, I'm going to take, anywhere from 450 to probably 550 off the table, just to reiterate, actually, that there's nothing wrong with putting that amount of money in your trading account with each winning trade to build up your stop loss bank. Trading the house's money is very, very comfortable, and everyone should strive to be in that position as quickly as possible. All right, we're getting close. Hold on, let me get ready to get out of this. I still expect the TSL1, the white line, to turn down and follow the direction of the yellow arrow that I drew there. All right, there's 400. There's a wide spread here, though. It's 10 cents. on the bid and ask. There's 500. 21 will probably give us a little resistance because it's been slow today. I mean, the market's been pretty slow. Even on a slow day, you can still pull, a bunch of money out. So I expect I'll probably just pluck out 500 here unless it drops. What is, okay, there's 6. I'll get out with 6. All right, I'm out with 600. Now, you see what I said? See how the white line, the TSL, finally turned down? Made lower highs. The two peaks of that TSL1 are at an angle. The previous one's higher than the current one. That's bearish, especially when you look at the, let me get rid of this. When you look at the price bars above each of those, that's divergence. We'll cover that another time. But this is oh, you know what I didn't say in the beginning? I forgot to tell you that this was not a slingshot gap. This is what I refer to as a strong bounce. You're taking a trade in the direction of the underlying trend, and they are fantastic trades. That's what I teach in the second chapter or the second volume of the Slingshot Trader course. That's what I'll teach you as well. Okay, I will talk with you later.